Tesla discounting the Cybertruck by 11 grand. So, Jim, you can get that Cybertruck that you've always wanted now on sale. I love it, by the way. So give us a call now, 800-321-0710, 800-321-0710. We are also live on Twitter Live. I don't know if Tom can get us video set up on the Twitter, at Your Financial QB. Are we at Your Financial QB? Is that our X handle? And you can follow us on Twitter. A lot of you worried about the stock market volatility. This too shall pass. So I'm going to talk to you about understanding market volatility. Take a deep breath, Jim. Understand that this too shall pass. Maybe in a year, maybe in 2 years, maybe in 6 months, maybe in 3 months, maybe it already bottomed a week ago. We have no clue. But we do know that following periods of increased volatility might be a good time to signal positivity in the stock market. So I'm going to talk about an understanding market volatility bulletin, if you will, for our listener friends. But as always, I really want to hear from you. So how do you manage volatility in a time like this? We'll talk about that and more, but I really want to hear from you. 800-321-0710. The tariff tantrums could give way to something much better and brighter ahead. You know what annoys me, though? Sports on Good Friday. Our kids had 2 baseball games scheduled on Good Friday. You know what I said? We're not going. You know, so people, the madness with these sports on holidays, so it's crazy. So Chag Pesach Sameach, for those of you who celebrate Passover, hope you have a blessed Passover. We had a wonderful Seder prepared by my wife. So we got a lot to talk about, but I really want to hear from you. So the tariffs, I actually said this February. We talked about Stephen A. Cohen, and I said, what is he prophesying? What does he know about the stock market? People are just going to suck money from the stock market. What does Warren Buffett know? And that was what worried me about the stock market. But I always tell people, only put in the stock market what you are willing to lose and kind of not see for 10 years. Because that's what will generally do better. So I got a lot to talk about, but I really want to hear from you. So, special edition, Understanding Market Volatility, Student of the Markets edition. This courtesy of BlackRock. And just before you vomit, you know, if you don't like BlackRock, they compiled all this data, so I have to give them credit. Volatility increases with economic and policy concerns. The number of big single-day swings are lower than previous years, with most coming during crisis periods. So the S&P 500 experienced 72 days of plus or minus 2% or more in the year 2008, 55 in the year 2009, 22 in the year 2010, and 35 in the year 2011. But we know the market bottomed in March of 2009. 17 plus or minus days in 2007. This year, we've only experienced about 9 or 10 days of plus or minus 2%. Just in 2022, 46 days. In 2020, where we had the COVID crash, 44 plus or minus 2% days. Typically, when you have volatility, these huge up days and huge down days, those are in periods of a bear market. But some might say, well, I'm going to sell now because of these swings. History would prove it may or may not be a good idea. This is interesting. What stock market volatility can tell us about the potential for economic growth. So if we have 10 or more plus or minus 2% trading days, which we're kind of approaching there, the average return during that period was 0.3% and GDP growth was 1.3%. If you have less than 10 days, the average S&P return is 19.9%. But that might lead you to believe you can just pick, just get out of the market because you can pick the best and worst days. Well, you can't. March 2020, when many of you wanted to sell everything due to COVID lows and this time being different, market 2020 volatility showcased how quickly markets can rebound after significant drawdowns. 3 of the worst days since 1950. What were those 3 days? 3 of the worst 10 days were March 9th, March 12th, and March 16th of 2020. The S&P 500 declined negative 7.6% on March 9th, negative 9.5% on March 12th, negative 12% on March 16th. The return 1 year later was 43.6% for March 9th, 61.8% for March 12th, and 69% from March 16th. Meaning if you tried to pick which day to go in or which day to go out just because of volatility, you could have lost a massive gain. Now, what were the best days since 1950? 5 of the best days were all in that March-April 2020 period. So if you sold, let's say, March 12th, you had to get back in March 13th to get a 9.3% gain. March 24th, 9.4% gain. April 6th, 7% gain. The return 1 year later from April 6th, 55.6%. The return from the March 24 day, 61.7%. Over the last 20 years, 24 of the 25 best days in the market occurred within 1 month. 1 month of one of the 25 worst days. This is from BlackRock Morningstar as of March 31st, 2025. The S&P 500 is represented by the S&P 500 index from March 4th, 1957 to March 31st, 2025. And the IAS BBI U.S. Large Stock Trailing U.S. Index from January 1, 2026 to March 4th, 1957, because the S&P didn't exist then. Unmanaged indexes are generally considered representative of the U.S. stock market during each of the given periods. Index performance is for illustrative purposes only. It is not possible to invest directly in an index. Of course, you could buy an index fund, but it wouldn't track exactly with the index. Usually there's a slight tracking error. Past performance does not guarantee or indicate future results. And staying invested has generally been more important than timing. It's time in the market that matters waiting for the right moment to invest could mean missing crucial performance. Now, that is for strategic investors. For tactical investors, I will explain what I believe is a solid tactical strategy if you're worried about the buy and hold strategy in these markets. Give us a call, 800-321-0710, and call me right now. I'll give you this bulletin for free if you schedule and keep your no obligation review. It's an 11-page bulletin, Understanding Market Volatility. Give us a call, 888-988-JOSH, 888-988-5674, 888-988-JOSH.
Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the financial quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check. Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the Financial Quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org.
Okay, we're back. This is Josh Jelinski, the financial quarterback, coming to you live, 800-321-0710. If you have questions on stocks, bonds, annuities, mutual funds, whatever question you have, no question is a dumb one, except the one that you do not ask. So feel free to chime in. We're talking about market volatility. And how missing top performing days can hurt your return. This is if you're a long-term strategic investor. If you're not a long-term investor, consider a volatility buffer. Those are strategies that are not tied to the stock market. Things like fixed annuities. Right now you can get fixed annuities that pay you 5 to, 6% with zero internal fees for 5-year holding periods. Now, a fixed annuity is backed by the claims paying ability of an underlying insurance company. So you want to make sure you pick an A-rated company or better. But the beauty of those is you hold them, you put $100,000 in or $1 million in, you get your $5,000 or $50,000 of interest, and you sleep well at night. And you can do that for 5 years with a 5-year program. Now, what happens if you take your money out? Well, you need to have an emergency fund and liquid cash. But beyond the emergency fund, you're allowed to take up to 10% penalty-free with zero surrender charges. Now, if you take out more than 10%, a surrender charge may apply. But there are a lot of good things. There's good bond rates. There's good treasury rates. So call us at 888-988-JOSH if you're shopping for fixed rates in these uncertain periods. Staying invested has been more important than timing. So if you invested $100,000, this is as of Bloomberg, BlackRock, 12/31/2024. Remember, past performance is no guarantee of future results, but if you put $100,000 in 2005 and you didn't do anything, a lot of scary moments between 2005 and 2024. 100 grand grew to 717,000. But if you missed just 5 good days, that 717 turns to 452. Missing 10 days turns into 328 grand. Missing 15 days turns into 249 grand. Missing 20 days turns into 197. Missing 25 days turns into 158,000. So be careful. What about buying when the stock market is down negative 10%? Market pullbacks offer a strong opportunity to invest and buy the dip when others seek to exit. The median return following a negative 10% decline, this is the last 20 years, performance for the next 12 months. So things could get worse. I'm not saying they can't. But generally, returns following a market decline of 10% or greater are 15.9%. This source, BlackRock Bloomberg, March 31st, 2025, if you invested in the S&P 500 following a 10% market decline. Returns from the market bottom of negative 10% or worse, 24.5%. See, a lot of you are tempted to say, oh, this time is different. But generally, it isn't. Stock market corrections of greater than 10% and bear markets, this is the last 20 years. Now, if you're a student of market history, you could say, well, what about 1929 to 1932? Well, that was a very bad period. I don't know if we're there, but we'll see. 2000 to 2002 or 2007 to 2009. Well, let's talk about 2007 and 2009. Horrific. Negative 56.8% market crash. October 9th, 2007 to March 9th, 2009. The date it crossed, November 26, 2007, was, the date it crossed negative 10% was November 26, 2007. The next 12 months, it was negative 36.9%. Only one of two periods where the 12-month return in this data set was bad. It's negative 36.9. But the forward returns, if you had held on from the bottom, which ended up being March 9th, 2009, was 64% the next 12 months. So that was the worst period. The second worst period, surprisingly, for the next 12-month theory was October 27th, 2022 to February January 3rd, 2022 to October 27th, 2022. And the date it crossed negative 10% was February 22nd, 2022. The forward returns were negative 7.3, but after that, from the bottom was a plus 22%. So the two periods where it did not work in the last 20 years to buy in a 10% dip were in 2022 and March, that 07 to 09 period. Every other period in the data set, that goes in 2010, 2011 had a correction, 2015, 2018 had two, 2023 had one, 2020 had the COVID drop, and of course we're there now with the February 19th to April 19th drop. What will the next 12 months bring us? We shall see. What say you give us a call? We have Maurice. Go ahead.
Hi, good morning. Chag Sameach.
Chag
Just
Sameach.
one more day of matzah.
Yes.
I just called in because I was thinking of something. I'm in my 80s. My wife passed away. I'm alone. And my son-in-law handles a lot of my work. I have money of my own. and I started investing 100,000 in treasury notes, monthly notes, and I already accrued over $1,000. What do you think I should do at this point?
Well, treasury bonds are a great safe haven
Story.
in these
I was
times.
in advertising for 50 years. I was one of the madmen.
Huh.
And I worked with Trump. Trump came to our advertising agency, and he wrote the book, The Art of the Deal. And he wanted a commercial for it, or even a game created, because we had the account for Hasbro, and I had Hasbro stock also at that time. Did very well. But the idea is that um, he, he was wonderful, and we used to talk all the time. You know, it's because we shot his commercial. We wanted to do something like a game, like Monopoly, you know. And I worked with him for over 2 weeks in his office, and it was just an amazing time of my life in the advertising business.
What happened to the game?
I don't know. I'm trying to find out what happened to the commercials I did, and it didn't run long. That's the problem. It didn't run long. It was sort of an experiment on his point.
So here's the thing. I'll tell you what happened to the game. I think his buddy Robert Kiyosaki took the idea and ran with it. We have a game that we play with kids, and I highly recommend you buy it for your kids and grandkids. It's called Cash Flow. It's very similar to if Donald Trump or Robert Kiyosaki did a deal. Now, I know people on the left were doing an interview with Bill Cohen, and he talks about, William Cohen, he talks about, oh, we didn't read the book. Tony Schwartz wrote it, but it was a good book. And I think it's instructive of what he's trying to do with the tariffs. I think we need to read Art of the Deal to see already this week Trump is bringing the Chinese to the deal table. Chinese this week. I don't know if you hear. Do you guys hear this good news on the regular TV or radio? I don't know. I don't even watch the news anymore, so it's just a waste of my time. I get it on the internet. But China's coming to the table. Did you hear this, Jim?
Yes, I did.
Did you hear it because of me, though, or did you hear it
No.
on the news?
Heard.
So China's coming to the table. Other countries are coming to the table. And the idea of what Trump is trying to do is reciprocity. Here's the thing. You have some people who say, oh, Larry Kotlikoff, I read his newsletter. He said, the tariffs are like a barber. And I actually thought this was a good analogy for a while. Then I thought about it. You know, that's not what's going on. I'll talk about that in a little bit. But yeah, the Art of the Deal board game, I think it's called Cash Flow. It was done by Robert Kiyosaki. And it's a very powerful, oh, it's right here. It's called Trump the Game. Did you read it? Did you ever get this book? Did you ever get the copy of the game, sir?
No, I left that agency and I went to Young and Rubicam, who I worked for many, many years. You know, but
okay, we'll get in touch
really
with my
wanted to get a
office. We'll
copy of
see.
the book.
We'll see if we can buy a copy. It's called Trump the Game. You can buy it on eBay. I can't believe it. Yeah, there is a Trump of the Game. You can find everything on eBay, right?
What?
You can find anything on eBay. So call us at 888-988-JOSH. I'll tell you how to get that. But let's talk about your question, bonds. Do you like your treasury bonds or no?
Well, I love them, but it's going to go down to, I think, 4.32, something like that. 4.13.
Oh, yeah. So it's dropping. So here's what you do. If you have treasuries and they're dropping, you can lock in fixed rates for 5 years, for 10. You could buy 10-year bonds. You could buy 5-year bonds. You could buy 5-year what are called MIGAs, and those are paying 5% or more right now. So call our office at 888-988-JOSH. I'd be happy to walk you through that. You said your son-in-law helps you, so you could have him take you to a meeting with us, or we could do a Zoom at your son-in-law's house or whatever, over the phone or over the internet.
Yeah.
Okay?
Yeah.
But
he's a brilliant boy.
But fascinating.
It's but what about it's coming due at the end of this month?
Yeah, well, call us today. We'll get it set up.
You don't know. It's through Wells Fargo, actually.
Yeah, we could help you. Yeah, just give us a call. I don't know your exact bond. If it's coming due, you're going to go from making 4 or 5 to making 0. So I guess they're telling you could buy another one for 4% or 3.9, but rates are coming down.
Right. Yeah. That's what it's for, something.
But if rates are coming down, why get 4 when we can get you 5 or something like that? You know. So call us. I like treasury bonds, but I like making a little bit more money better. Okay. So we could help you with that. Give us a call at 888-988-JOSH. If you or any of our listeners want help getting better rates, as rates are starting to decline a little bit, one of the narratives of the tariffs and the tariff tantrum is that Trump is trying to bring inflation down and interest rates down by holding firm on the tariffs. I'm going to talk to you about a rationale behind the tariffs that may make sense. One of those is, this is what people don't realize, is China has been abusing our intellectual property for years, and no one has done anything about it, Republican or Democrat. We'll talk about that when we return. This is Josh Jelinski, the financial quarterback. Don't touch that dial.
Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the financial quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org. Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory. Or maybe you're worried about another great recession. Josh Jelinski, the financial quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check.
Okay, we're back taking your calls on all matters financial. If you have questions on stocks, bonds, annuities, mutual funds, no question is a dumb one, except the one that you do not ask. So call us right now. We're here for you on a special Understanding Stock Market Volatility edition for Pesach and Easter Resurrection Sunday. We're here for you. There is always a reason to sell. Did you know that? There's always a reason to get freaked out in the stock market and sell everything and go home. That was a fascinating story from that gentleman who helped Trump build a board game. And I was like, I don't remember seeing a Trump board game. What's this guy talking about? That we found the board game. You know, it was in 1989. It was the Art of the Deal board game. And pretty powerful stuff, that's for sure. You learn something every time from our listeners, that's for sure. So what about you? Give us a call, 800-321-0710, 800-321-0710. Basically, the point of what I was saying earlier before we were talking to Maurice is there are stock market corrections of 10% or greater. It's usually not a bad time to buy. Now, it could always be worse, as we saw in the '08 crash and the 2022 crash, but during the last 20 years, those were the worst times. There's always a reason to sell. Market pullbacks, corrections, and bear markets happen more often than most people realize. And let's just say we are at the worst periods in history. What would have been the average annual return if you had invested during the worst periods in history? Now realize investment returns are from the S&P 500 trailing index, March 4th, 1957 to March 31st, 2025, and the IASBBI large stock TR US dollar index, January 1st, 2026, March 4th, 1957. These are unmanaged pairs of index that are generally considered representative of the U.S. stock market. So let's just go through them. Average annual returns since 1926. So let's say, Jim, you were around in 1926, and you said, I'm going to buy, and I'm never going to sell. You would have made 10.4%. 1929 Great Depression, 9.8%. These are the average annual returns since these major events, if you never sold. 1940 World War II, 11.3%. 1973 bear market, 11%. 1987 market crash, 10.4%. 2007 tech bubble bursting, 7.7%. 2007 global financial crisis, 10.2%. COVID 2020 shock, 14.3%. And the 2022 inflationary shock, where Fed Chair Jerome Powell said inflation is transitory. People give Trump a hard time about saying, oh, this guy's got to go. I think we should just end the Fed right now. They're unelected. Remember when Ron Paul said end the Fed or audit the Fed? That I think would get Trump bigger support. Just get rid of the Fed. I mean, these people always call things incorrectly, and their inaction usually causes a market crash, and then they create something to make them look like heroes in a time of economic calamity, but in reality, they have the data. They know. So check out all of the reasons to worry. Let's just go through a $100,000 investment from December 2008. President Obama was elected. I remember people saying Obama would tank the stock market. The stock market did tank initially from December 08 to March of 09, but then it had an epic rise during the 2 Obama terms. But the next thing was the global financial crisis. Then the Chrysler and GM bankruptcy. Then the BP oil spill. Then the U.S. credit downgrade. Then the flash crash. Remember that? Scary day. U.S. government shutdown. Taper tantrum. Russia takes Crimea. Oil prices plunge. The Russian financial crisis. Brexit. Remember that? The Chinese stock market crash. The Shemitah. Trump elected. Then the trade war. People said Trump would tank the market. the first term. There were two U.S. stock market corrections in December of 2018 during the first tariff tantrum and the second during the COVID bear market and recession. Then there was a crypto crash. There was a trade war. There was U.S. government shutdown. There was January 6th during Biden. You know, and all these people said Obama would tank the stock market, Trump, and then Biden. But if you did nothing, you would have made more money than trying to get out. And you would have regretted getting out. And there's the Afghan withdrawal, Russia invading Ukraine, the inflation shock, Fed rate hikes, and the 2022 bear market. And there's a Trump assassination attempt, Silicon Valley Bank falls, Israel-Hamas war. The ending value of a $100,000 investment in December of 2008 would be $851,000. Always remember, time is the friend to the investor. We're going to go to the phone lines. We have Gordon. Go ahead.
Yes, Josh. I was wondering, I understand that for many years the communist government in China has been trying to change the investment, the ways that most of their people invest. Even though China is a much poorer country than the United States, they have so many people that if their investment decisions did change, it would in an aggregate, it would certainly make a difference. If the Chinese can change their people's investment decisions at this point, would that upset Trump's plans, economic plans, do you think?
If China did what?
If they were able to change the way their people invest. I'm not sure exactly what the Chinese invest in, most Chinese invest in. But if it changed, I wonder if that would change Trump's plans.
Well, be clear, no one will win an ultimate trade war with China. There'll be many victims. But here's what I would do if I were President Trump. I would have three things to a China deal. We remove all tariffs from them, they remove all tariffs from us, or there's no deal. See, people cannot cower. He cannot cower in this period. And I read this article by Larry Kotlikoff, and it was interesting. We'll be launching an interview with William Cohan, and he talks about, and you'll hear this knock, tariffs are like, or a trade deficit is like you going to your barber. And you have trade with your barber, but your barber necessarily doesn't buy anything from you. So in a way, every time you go and you pay $30 to your barber, or $20 to your barber, or Jim, you go to the $5 cuts place still. What is that now? $20 cuts? I don't know. But remember the $5 haircut place?
I think they're still around.
Yeah, I don't think they call $5 anymore.
Probably $7.
No, I think it's 20 now. They cost. It did become 7. I think it's 20 now. So you go to the $20 or $30 haircut place. You don't say you run a trade deficit with your barber. You're paying your barber for a service they're doing for you. And tariffs are like if you turned around and charged your barber a fee of $20, he's just going to then charge you $50 to pay the tariff. Well, I don't think that's the point. The point is, well, why are these countries tariffing us and we don't have to tariff them? So, and the other point is we've had free trade, which has not bode well for the American worker. So let's have fair trade. Let's have reciprocal trade. And so I don't think some of the critiques on the tariffs are actually fair, even though I'm not a big fan of them. But the idea is they haven't really been done. It's sort of a experiment. And the threat of these things may cause somebody like China to come to the table. Here's the real problem with China. They are ripping off our goods. You ever go on Alibaba or Temu, Jim? You can buy the same thing you buy in Amazon for 10% of the cost. As an example, let's say you're looking to buy a foam surfboard for your children or your grandchildren. The foam surfboard would cost $350 from the U.S. manufacturer, bringing good old jobs in the U.S. of A. But that surfboard manufacturer uses a mold from China. They make it in China and they ship it to the U.S. Maybe it costs them, I don't know, $50 a board. They charge you $350. They make $300 of profit, pays their workers in the U.S. What China is doing is they're robbing that intellectual property, and instead of, we'll call it, I don't know, instead of a wave storm board, it's a wave strom board. Instead of a Rolex watch, it's a Rolox. And they create the mold, charge a fraction of the cost. It's probably not made the exact same way, but the mold's the same, it looks the same. You buy it for 99 bucks on Temu or Alibaba. That money goes to China, it doesn't go to the U.S., and it hurts the American company. The biggest problem with China is the fact that they're stealing our intellectual property and just doing the same thing over and over again. So, for example, Tesla, they have a company called BYD that's sort of the Tesla of China. Now, China has a big market for Teslas, and I guess they could say, well, we're not going to buy U.S. goods as an act of war, active trade war. Boeing, for example, they said, we're not taking delivery of Boeing jets, but are they really going to wait years and years for these jets? No. So it's going to be part of the deal. Boeing's probably already calling the president saying, hey, we need you to cut a deal. And Trump is predicting a trade deal and vows a 100% chance of an EU agreement. So for all the flack President Trump is getting, there could be a lot of good things that come out of this. We could get some of the best trade deals of our lifetimes just because he was not scared by a little, 20% dip in the stock market. You and I are scared, right? A little bit. I'm not that scared, but the market has an effect on people's psychology, right? So I don't know if they can say, hey, we're not going to buy you. They can certainly do things like what they did to Boeing, though, Gordon. I hope that helps you. Any other questions on that, Gordon?
Yes, if you don't mind. I was, a number of years ago, you got a call on your show. He wasn't on the air, but his words were not on the air, but the essence of the call was that he had accumulated, his name was William, a person named William called, and said that he had, even though he was just, he had a humble civil service job. I believe he was a librarian for the city of New York. That's my best guess. He had accumulated a large amount of money, several millions of dollars, because he had a secure job and was able to invest very consistently in the stock market, and never didn't worry about losing his job, so he could keep investing consistently. Do you think that will be people will be able to do that in the future, or do you think even government jobs in the future will become less secure?
I think in a lot of ways, yeah, I mean, with AI, a lot of jobs will become less secure in the future, right? Your job might be replaced by a robot. You have to be careful. You got to think through that. What are you going to do? That's why you got to save. You got to save 15% of your pay religiously. Now, there is still good work out there for people. There's a labor shortage of good people. some have said, people who want to actually work, for a living, not live off the government dole. But I think there's always going to be jobs for those who are industrious and work hard. And there will always be a future for those of you who want to save. Got an email from a listener. We'll go to that when we return. But we'll take your calls at 800-321-0710. This is Josh Jelinski, the financial quarterback. Don't touch that dial.
Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the financial quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org. Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the financial quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check.
We're back. This is Josh Jelinski, the financial quarterback, taking your calls on all matters financial at 800-321-0710. We got a lot of calls, emails. We got a dear listener friend who says the market is giving her chest pains. We'll talk about that later. Don't have it give you chest pains. The whole purpose of this show today for you to relax. The market, many of you, by the way, have enough money to be okay for the rest of your life. And some of you need to get a life and not worry about the stock market. I don't mean that disrespectfully. I mean it like go for a walk, work out, go for a jog, walk your dog, walk your cat, help out at a volunteer at a local church or soup kitchen or shul. Do things for the community. Be a friend to somebody who needs a friend today. And the market generally goes about its business. There are these times of economic upheaval, and then for some reason they correct because people want to get on with their life. I'll never forget in the middle of the COVID crash, how in New Jersey, in the Jersey Shore, people kind of threw off the COVID rules. And they said, you know what? We're going to go to the beach Memorial Day weekend 2020. And the beaches were packed. And people were a little uneasy. And you know what? I hope never again will the populace be fooled to do that. People died alone. People died alone in nursing homes or in their homes because their families were afraid to visit them. Now, sure, pandemics are real and there were real issues, but live free. So this woman says there is a Trump basement game in her closet. I'll take it from you. You want to give it to me as a thank you? She says, I'm laughing as I remember who gave it. We enjoyed it until 2016. I should use that Trump money for gifts until his presidency term is over. So don't be in a rage over that. I'll take it. Or you could sell it on eBay, make a little profit. So we have Sean. Go ahead. You're on with Josh Jelinski, the financial quarterback.
Oh, it's great to be on your show, Josh. I mean, the way things are going politically and financially, it's more of a financial thing than an economic thing. What's going on in the country and around the world with the stock market and oil prices. But, you know, something, people have to realize that the United States of America is not the welfare system for the world and for the world to come here and soak the American taxpayers dry. It's really disgraceful what's taking place. You could see how people easily get brainwashed. You listen to some of these yakety-yak shows, and all they mention is Fauci and Pelosi's names. Those people who mention those names are basically useful idiots. But then the communist Chinese are laughing their heads off because they're protected by the establishment, and they sent the virus here. The communists did, not Pelosi, not Fauci. And I'm just wondering, like, people panic sometimes when they see a big rockety stock market dropping down and everything. So I think it's just an individual thing, what you can tolerate, how much you can tolerate. And that's what it comes to. Some people will flip out if they see their things go down, and some people are as cool as a cucumber. So it's an individual thing. And I know when the computers start going off with the sell orders, it's going to knock stuff down tremendously. But I just want to emphasize, the country is a different place now. Democratic Party is a hard left party. It was created by the 65 Immigration Act and massive illegal immigration that's taken place for the last 60 years. It's never going back. And that is the contention, and that's what it is. But I don't see compromise there. People say compromise. What about men playing hockey against women, men playing basketball, men boxing against women? No, there's no compromise there, and there's no debate there. And along with the country being invaded.
Got 30 seconds. Got 30 seconds.
All right, I'll basically wrap it up with this. This is a great show, but I just want to tell people, 65 Immigration Act has to be repealed. Illegals have to be put out of the country. It's going to be a big fight. They're going to tie everything up in the court system. The hard left agenda is use the system to destroy the system.
Well, thank you for the call. Now, here's the thing. Take a deep breath. This too shall pass. Historically, periods with high bearish sentiment have led to positive stock market performance. So though sentiment may be bearish, that's actually a positive indicator. Call me right now, 888-988-JOSH. I will give you the Understanding Stock Market Volatility Bulletin for free, 888-988-JOSH.
WOR and WAXQ HD2 New York, the #1 preset on your car radio and on the free new and improved iHeartRadio app. Free. Never sounded so good.
New York has a voice.
Talk about a station that's woven into the fabric of New York City.
WOR, nobody else.
Always the voice of New York. 710 WOR.
An iHeart radio station.
It's 68 degrees at 10 o'clock. Good morning. I'm Bill Trefiro. There's been an arrest after the body of a dismembered Connecticut woman was found in her home last month. The arrest is of her son. Andrew Whitman has more.
Police found the decomposing and dismembered remains of Tina Lloyd in 14 trash bags inside her West Haven home March 24th. They say the 71-year-old appeared to have been dead about 2 months. They also found signs someone had been setting fires. Now Lloyd's 27-year-old son Theodore Lloyd has been arrested for attempted arson. He's being held on $1 million bond, and police say they expect he'll face more charges soon. Andrew Whitman, WOR News.
4 New York City candidates are vying to be the next mayor and are blaming former Governor Andrew Cuomo for the housing shortage. Natalie Migliori has more.
They joined tenant advocate groups outside City Hall accusing Cuomo, who is also running for mayor, of creating the city's affordability crisis.
In his final year as governor, New York City lost 66,000 rent-stabilized apartments, and that ain't right.
He does not have an answer for how he could make the city more affordable.
They accused him of working with people who make millions of dollars off the city's inequality. Mayor Adams also slammed Cuomo for allegedly using artificial intelligence to create a housing plan for the city, saying it mirrors his own outline.
A former New York police officer, Michael McMahon, has been sentenced to 18 months in prison for acting as an illegal agent for China. Prosecutors revealed that McMahon pressured a New Jersey resident to return to China under Operation Fox Hunt. He was convicted of interstate stalking and acting as an agent without notifying the U.S. Attorney General. McMahon was also slapped with an $11,000 fine for his actions. He claimed that he believed that he was recovering embezzled funds for a company and wouldn't have participated had he known China's involvement. Democratic Congressman Glenn Ivey is the latest member of the Maryland delegation to declare that he's going to visit Kilmar Abrego Garcia in an El Salvadorian prison. Democratic Senator Chris Van Hollen visited on Thursday. In sports, we have playoff action. Basketball, the Pistons play the Knicks at 6 o'clock tonight. The Devils play the Hurricanes today at 3 in the first round of the Stanley Cup playoffs. Baseball, yesterday the Yankees beat the Rays 1-0.
Here's your WOR Weather Channel forecast. It will be windy and warm this afternoon with a mix of clouds and sun at a high near 85 as winds gusting from the west near 20 to 30 miles per hour. And ahead of a front tonight, breezy with an occasional shower and an overnight low of 56. Clearing and cooler tomorrow, the high of 68. And Monday, partly to mostly cloudy with a high in the upper 50s. I'm meteorologist Jeff Marr.
Next News 11, bulletins at once. Wake up with Menti in the morning, 6 to 10 a.m. on Monday. I'm Bill Trefiro on 710 WOR.
Tired of losing money in the stock market roller coaster? Frustrated with the government taxing you into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jelinski. Josh is a noted financial advisor and president of the Jelinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now, let's kick off your financial future. Here's Josh Jelinski.
We got many of you tuning in on X at Your Financial QB. I don't know if we're on YouTube too. You can also check us out on YouTube. Search for The Financial Quarterback. Hit subscribe. Also download our podcast. Subscribe on Apple Podcasts or Spotify. And if you could do me a favor, give us a review, hopefully a 5-star review. 888-988-JOSH. We are live both on X and YouTube. Recent investor sentiment is very bearish. So you would think if people are more worried, that would be a bad time to invest. Positive performance typically is very strong following periods of top 10 bearish and bullish periods. Average annual returns, if you had been invested when the event occurred, the top 10 bearish periods, 25.1% rate of return 1 year after the peak bearishness. This source, BlackRock Morningstar, the St. Louis Federal Reserve, and AAII. As of March 31st, 2025, returns are represented by the S&P 500 index, an unmanaged index that is generally considered representative of the U.S. stock market. The top 10 bullish periods, when there's bullish sentiment, negative 2.2% over the next 1 year. Over the next 3 months, positive 5.9, negative 3.2 in the top 10 bullish periods. And folks, call us today for my free ultimate legendary retirement game plan. If you want a financial plan that is heart to heart, caring about your heart, all heart, no regrets, call us today, 888-988-JOSH. The top 10 bearish investor sentiment periods, March 5th, 2009, 70% of investors were bearish. The next 3 months, 38.6% gains. The 1 year gain was 70%. In October of 1990, the bearish sentiment was 67%. The average annual next 3 month return, 7.3% positive. And the average annual return over the next 1 year was 29.9%. Happened again in March 1990. Next 12-month return was 26.9%. September 22nd, 2022, pretty recent history. 60.9% of investors were bearish. The average annual 3-month return, 2.2%. The average annual return over the next 1 year, 16.9%. In '08, average annual return over the 1 year was 20.9%, even though 60% of investors were bearish. September 29th, 2022, 60.8% bearish reading. Where we are today, as of, we're around that 60 to 70% mark. So that would bode well. The only time it did not bode well in recent history was April 28th, 2022. There was 59.4%, and the 1 year return was negative 1.1. But then things did correct the next time. So, folks, give us a call, 888-988-JOSH, 888-988-JOSH. Folks, call us with all of your financial questions. I don't really want people to, like, get on here and politically rant. I tried to allow everybody on to voice their opinions, but we'd like to keep it generally to financial planning questions. Although there is some intersection with tariffs, trade policy, tax, things like that, and your money, you can voice your opinion on whether you think that it's a good thing or a bad thing, but I really have nothing to do with immigration policy or, you know. I would actually say if we bring all of these jobs in the U.S., we're going to need more workers, you know. So we want a very strong base of legal immigration. So the performance following bearish sentiment is typically good. Now, this is interesting. I'm going to give you the top 15 worst market days since 1950, not counting the recent couple bad days we've had interspersed through the last month or two. A lot of people remember 1987 market crash. It was a 20.5% decline in the 1 day. The return 1 year later was 23.1%. March 2020, negative 12% decline. There was a 69% return 1 year later. March 12th, 2020, negative 9.5% return, 61.8% gain a year later. October 15th, 2008, negative 9% return in a day. Those are scary days. Positive 20.8% return. Reminds me of a couple weeks ago, right? Was that April 3rd? Didn't give me chest pains. April 4th, April 3rd, but it did make me want to vomit looking at how bad the market performed that day. So, I get it. I would say that there's something called risk premium. In exchange for dealing with the risk of the stock market and those scary days, you're going to get a higher favorable return, inflation adjusted. October 2008, October 15, 2008, there's a negative 9 day. 20.8% return 1 year later. December 1st, 2008, negative 8.9% return. Plus 35.9% 1 year later. September 29th, 2008, negative 8.8% return. 12-month return, negative 4.1. And that's actually the worst 1 year return period. October 26th, 1987, negative 8.3% return. 1 year later, 23.5%. You get the point. Negative returns averaging 8.9%, negative days, the following 12 months averaged 30.9%. This encompasses the Gulf War, the Asia monetary crisis of the late 90s, the tech bubble of the early 2000s, Black Monday, 1987, the GFC, the global financial crisis, the first Trump trade war, the COVID-19 sell-off, and the inflation shock. And you You got to win more by losing less. Now, for those of you that are non-strategic investors, so when I say strategic, so in our RIA, Registered Investment Advisor, there are two types of portfolios. We have strategic and we have tactical. Strategic is generally for the long-term buy and hold crowd, where we focus on diversification. Now, although diversification does not guarantee returns, we try to have things that weight differently in a portfolio. For example, gold is up this year, so having a 4% exposure to gold would help you lose less when the S&P is down. Adding different dimensions to a return. Adding different analysts like Dr. Richard Smith talks about adding a 1 or 2% exposure to Bitcoin or Bitcoin ETFs. Not recommending you buy Bitcoin. I'm just saying there are things you can add, asset classes, to enhance your risk-adjusted return. That is more of a strategic dimension and focusing on buying good companies that you believe will weather a recession. Now, buying Costco, for example, which I own and we own in our portfolios, doesn't mean that it won't go down in an environment like this. But we believe that it will withstand a recession and survive. Doesn't mean the stock price can't go down. So if you're a strategic investor, you have an emergency fund, have 1 to 3 years in the bank to weather these types of moments, and don't worry about your money. Go on that trip. Right, Jim? Enjoy your life. So that is the strategic investor. We focus on buying good companies with good fundamentals and good funds. And how do you know it's good? Well, you look at track record, you look at cost, expense ratios, things like that. So that's what I would call a strategic investor. A tactical investor focuses on scaling in and scaling out of the market based on different technical indicators. And I thought you just said, oh, we can't time the market. You can't time the exact tops and bottoms, but you can say, well, I'm going to raise more cash in this period, and I'm going to deploy more. So, for example, you could use something like a moving average to position size. You could use position sizing. I'm going to have 75% invested and 25% in cash. And then when your bullish signals are there, you could go 95% invested. When your bearish signals are there, maybe you go 50% invested. So you are trying to mitigate loss, not because you can time everything perfectly, but you're trying to scale in and scale out of positions. And sometimes you win more by losing less. Diversification and minimizing losses, even at the cost of upside capture, can have a larger, can get you a larger long-term return, potentially, than full participation in both bull and bear markets. And I'll explain, or comparable returns, with less Alka-Seltzer. This is from Morningstar as of March 31st, 2025. So the hypothetical investor captured 80% of each bull and bear market of the S&P 500 when benchmarked to that index. So in one case, we are illustrating the entire S&P. And we're going to call the first investor person A, the second investor person B. They both start with 100 grand. They both end up with 505,000, which is interesting. If you put 100 grand in October 9th, 2007, March 31st, 2025, you'd have 505,111 in the S&P 500 index, not adjusted for fees or taxation. And you can't directly invest in the S&P, but there are index funds and things like that. You put 100 grand in, lost 55%. Your 100 grand became 44,700. So you got a negative 55. That's tough to endure. And then a plus 529. 529% return from March of 09 to February of 2020. Then another negative 34% crash. So the 281, because your 44 grand became 281, then drops to 186. Then another rally from March of 2020 to January of 2022, 186,000 grew to 410,000. And then a negative 24% drop. That was the inflation is transitory, thanks to Jerome Powell for that. 410,000 went down to 311,000. And then there was a rally from October 2022 to just last month. That represented a 63% gain. 311,000 grew to 505,000. But you got to deal with a negative 55, a negative 34, and a negative 24. Difficult. But let's say you could invest in the S&P, get 80% upside capture, but then you're going to get only 80% downside capture. So you're able to mitigate risk slightly. Less Alka-Seltzer, less chest pain, same result, which is pretty interesting. That negative 55 became a negative 44. The plus 423 was the plus 529, but you're roughly at the same place in March of 2020. They both ended around 505,000 in March of 2025. This is all in the free report that I'll send you if you call us at 888-988-JOSH and request your no obligation review. Recessions and performance. Let's talk about what if we go through a recession? Now, by the way, I don't see a recession unless everybody keeps saying recession, recession, recession. Everybody sells everything. Employers start firing people, laying off people. But could happen, right? How do asset classes perform in recessions? Diversified portfolios with fixed income exposure have performed better during recessionary environments. Average performance during a recession, this from BlackRock, Morningstar, and NBER, as of March 31, 2025, average stock performance was 1%. Average bond performance was 7.8%. But if you blend 60% stock with 40% bonds, the performance was about 4%. So just by adding a dimensional component of bonds, and this is from the Bloomberg U.S. Aggregate Bond Index, recession dates are noted by the NBER business cycle dating. Index performance is for illustrative purposes only. It is not possible to directly invest in the indexes, although, there are ETFs that track it pretty well with only, a point, whatever, 0.04 tracking error, whatever it is. The recessions. So this is interesting. The 1929 to 1933 recession had a negative 19% portfolio performance on the 60-40 portfolio. The 1937 to 1938 bear market, negative 9.9. This is interesting. Of the various recessions historically, there have only been 4 times where the 60-40 portfolio, and I'm not the biggest fan of the 60-40. I don't recommend it. But if you are worried about the stock market, you could have 60% stocks. I would argue 30% fixed income, 9% gold or something, 1% Bitcoin, and probably do a whole lot better than this traditional 60-40 portfolio. I don't have data on that today. So I'm giving you the 60-40 portfolio just to show you that if you want some of the gains of stocks, but times like this are uncertain, you can add 30 or 40% bonds, and in the 20 past recessions from 1929 to March 2025, only 4 periods were negative returns. And one of them was a negative 0.1% return. That was from March 1, 2020 to April 30th, 2020. Negative 0.1 portfolio performance. So the real negative times were 08 to 09. That was negative 11.5. That's a 60-40 portfolio. June 37 to June 38. That was a negative 9.9. And September 29 to March 33. Now, there are people who are saying this time is like the next Great Depression. I don't know. I think Powell would cave before we get there, but maybe I'm wrong. You know, what say you give us a call, 800-321-0710. We'll take a break, and when we return, we'll be back with your calls at 800-321-0710. Follow us on Twitter at YourFinancialQB. Hit the follow, like, and subscribe. And do me a favor, give us a 5-star rating on our podcast, The Financial Quarterback, on Spotify or Apple. Thanks so much. We'll be back after these messages.
Josh and his and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the Financial Quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org. Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the Financial Quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check.
We'll be back. Interesting comment by Daily Dirt Nap's Jared Dillian. My guess is that if a Democrat is elected in 2028, he or she will keep the tariffs. So, this is pretty interesting. The share of attitudes toward free trade have rapidly polarized. This is from John Byrne Murdoch. So about 20% of people approved of free trade. Roughly 20% of conservatives, moderates, and liberals. Now, post-election, and John Byrne Murdoch says this, negative partisanship is a hell of a drug. Up until a few months ago, liberal and conservative Americans held pretty much the same views on free trade. Not anymore. It's interesting how our partisanship has affected things. Now, I don't know where people will fall on this. A lot will happen on this week. Trump says he's going to have a deal with the Eurozone this week. That could send the markets booming. Deal with China soon. That could send the markets booming. So give us a call now, 800-321-0710. Have you heard this thing recently that the market today looks eerily reminiscent to the October 29? Have you ever heard this? I've heard this every time the market crashes. Someone finds some technical overlay where the market crash of today looks similar to the market crash of 29. It is pretty interesting. This is from Tom McClellan. So it says this, the down day just happens to fit well within the 1929 pattern analog shown in the first chart. I mentioned one problem I had with this comparison when I showed it several days ago. Back in 1929, the stock market traded 6 days a week. And so a time comparison of trading day history is going to be inherently off a little bit. But the pattern resemblance is interesting. But it means nothing. You can't trade your life on this, and you can't live on some fear. It's ridiculous. Here's the thing. Let's say you sell everything because you're worried about it. What's going to happen next week? And they'll cut some trade deal, markets will boom, and you'll be out of it. So you just have to use some common sense, which appears to be uncommon. So give us a call, 800 321 0710. 800 321 0710. If you have questions on stocks, bonds, annuities, mutual funds, whatever question you have, no question is a dumb one except the one that you do not ask. You could type your question on Twitter at YourFinancialQB. We would love to talk to you. You could also type in the chat on YouTube. Jim's going to be checking the chats on YouTube for me. I'm checking the chats on Twitter. Well, now it's called X. By the way, so this is interesting. The Trump game, it belongs to the son. He told me to keep it here. We would never play it now, but he wanted some play day. New York careers and Monopoly with his kids. I figure when I die, they will each take the few things I have. Wives don't want my stuff, but they can fight after I die. I'm in the middle. So sorry, but I will put your name and email address on the box. Oh, that's thanks. Send it. Why don't you send it to me now? Nobody's going to be playing with the game. That'd be cool. Little Josh would love it. We spent lots of family time playing games. I love games too. By the way, I believe board games are one of the best things you can do with your kids. I have a kid who plays board games. He's brilliant. I think because of board games. He plays Risk, beating Risk. He plays Axis and Allies, and it's all about World War II. There's a game called Cash Flow by Robert Kiyosaki, which sounds like this Trump game, where it teaches money and values. We spent lots of family time playing games. We each had different favorites. So my son, we don't really let them play video games, except like Civilization, which is a kind of a historical game, but I generally only do it periodically. So this is pretty interesting. So the youngest, somebody liked Life and Risk. Someone liked the game called Careers. I don't know that game, Careers. Some, sorry. Some, her eldest liked the Trump game. Well, if your eldest liked the Trump game and he wants to keep it, he can keep it. But I'll take it if he's not into it. And then Happy Easter. You're all wonderful. I love our listeners. So, folks, give us a call, 800-321-0710. We're taking all of your financial questions at 888-988-JOSH. Here's the thing. Do you believe the best companies in America will survive? I do. What? Do you believe they'll survive, Jim? Yeah. Do you believe Costco is going to be around if we have a recession?
Yes.
That's the point of investing. It's not that Costco is going to go up every day, but we believe long term in the power of equities to beat inflation. What were you going to say, Jim, about Costco?
No, I just sent you a link.
What's the link? What's the link? On Costco, the Trump game?
Look at the price
Yeah.
range. Really,
Yeah,
look
this
at the
Trump
price
game,
ranges.
no, it's $30.
No, but people
44, 99, 30. I told the young lady to. Now, this one here that's on. Nobody's buying it for 100. They're buying it for like $20. I guarantee you. Nobody's buying that game for 100. You going to buy that game for $150? No, it says right here $40. And it's still not even being sold. 44. eBay is like a garage sale. People put up the price. Don't get in the way. This nice lady's going to give me it, and I'll cherish it forever. Not sell it on eBay. Her kids are just going to sell it. The Trump game? Our listeners are amazing. We have a guy who built the game. He said, I spent 2 weeks in his office. It's crazy. And then, it's pretty interesting. Trump the game. That's so crazy. It does look like, and it said on the tagline, it's not whether you win or lose, but whether you win. That's Trump. It's like no other game you've ever played. That's pretty cool. That makes you want to buy it, right? It looks so like from the 80s.
It does.
Right?
It's very 80s.
That's crazy. And then someone is selling a factory sealed one for $33,000.
What?
Trump the game factory sealed, never opens, with remnants of the original price tag. No one's buying this. The going rate seems to be, $40. Like that's what it seems to be moving for. But just
Gotta
because
come up with a board game.
just because some idiot puts some ridiculous price doesn't mean. But then this guy, I'm looking at the web right now. Can we show this on the screen for the people watching on YouTube? Trump the game sealed, $99. Does anyone want to buy his board game for $99? I wouldn't. Maybe 20. So next up, we're showing it on the screen of the YouTube. Trump the game, $99, factory sealed. Some idiot wanted 33 grand. Who are these people? And why would they do this? I don't know. I can't find it. Oh, here we go. Got like 1,000 screens up. Okay, we're going to take a break. We'll be back. Look at this. $44, $48, $30. So pretty interesting. So you can see my screen on the YouTube. It's as varied as the people in America.
424. Come on.
But the average is around, you can check by the plotter graph where it says available inventory. Let's say we want a new one. The people have a brand new one unopened. That one, there's another one that's called I'm Back and You're Fired. That's $48. But the 80s version, if it was never opened, somebody wanted $40,000. Who are these people?
Best offer.
But the going rate seems to be $99, but it's being listed, so no one wants to buy this game. So it's brand new. How's it been listed? How long has it been listed for? I'm not an eBay aficionado. The seller does not accept returns. Yeah, no wonder. If you're an idiot to buy this for $99, but it's not telling me. 4 people have added it to their watch list, probably because of this show. Then we got Trump the Game Vintage 1999. So these are the unopened. So if you opened it and played it, it's a lot less valuable. It's like $30. So we'll talk more about the Trump board game. Does anybody else have this game? Call us, 888-988-JOSH. We want to talk to you. 800-321-0710. I will be taking donations if this be beloved. You can mail it to me at 1400 Hooper Avenue, Toms River, New Jersey. You can box it up. That'd be a great gift for your neighborhood financial quarterback. We're going to talk to Steve, who wants to know about should he take his treasury bond and IRA money elsewhere. When we return, this is Josh Jelinski, the financial quarterback. Don't touch that dial.
Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the financial quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check. Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the financial quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org.
The best board game for learning about money to your kids that I thought was pretty good is called Cash Flow. How to get out of the rat race. Right, Jim? That'd be nice. No. So what the board game does is it teaches you how to get out of the rat race. So at first you're on a hamster wheel. And then you have to buy investments that kick off enough income so you then start investing. It's pretty interesting. That's about $30 on eBay. I honestly don't know about the Trump board game, whether it's a good game or not. So one lady said she loved it. Her oldest son loved it, who I think went to Harvard, because I would always fight with her about, college was a waste of money. She said, my kid went to Harvard. Okay, next up, we have Steve. Go ahead, Steve. You're on with Josh Jelinski, the financial quarterback.
Morning, Josh. Two questions that I have. One, I have a Roth and a traditional IRA with the major brokerage house that you deal with. I get calls once a week through them. They said they have people willing to buy it because I'm getting 4.65 on the IRAs. Now I'm thinking if they start lowering the rates eventually, that those IRAs would be worth more to sell. And then the other question I have is, I have a treasury bill due paying 4.98 July 15th, which is about 3 months away, with one of the major brokerage houses that you deal with. And there's a money market paying 2.4, I have about 240,000 in that. They're telling me to put that back into the market. What do you think about that?
Well, it depends on your risk profile. So let's first talk about fixed rate products. Fixed rate products are money markets are getting around 4 right now. Fixed annuities as low as 2 years to 5 years to 10 are getting like 5 to 6% in the fixed market right now, as opposed to treasuries, which are getting like 3-ish to 4-ish now, depending on if you do 10 years. It depends on your risk profile. I like 10-year bonds. I like 5-year. I like 1 year. I like MIGAs. I like fixed annuities right now for good rates, provided they're with A-rated insurance companies. As far as market money, I would invest either strategically or tactically. We can help show you how to do that at 888-988-JOSH. I would just not blindly go into the market just because it's down. I would look and say, well, what represents a good value even if the stock market should go into a recession? So what would you be okay holding? And provided you have an emergency fund of 12 months living expenses in the bank so that it doesn't really jeopardize your lifestyle, a market crash, I'd be okay with deploying a piece in the stock market, but we would certainly help you with that.
All right, because the thing is, too, I'm 70, I'll be 71 in July. This is all the money. I have, like, I think 108,000 in a regular bank with a checking account that, you know, I take money in and out to pay my bills or whatever I need.
Well,
But
go
my
ahead.
thing is, it's like, how would I know if I need this money? They're telling me I'm probably not going to use the money. How would I know if I'm going to need it or not?
Well, you model out things where you would need it. You model out your expenses. So we have a flight simulator for your money where you can simulate the 5 investing domains. So you would need the money if a couple things happen. One, what would happen if you had a healthcare event? You know, so you would need a certain amount of money to tap for your day-to-day expenses, your budget. And we would walk you through the 5 investing worlds. Income planning, legacy planning, income planning. Just like what you're talking about. I don't know what I need. Well, you should know what you need over the next 12 months, especially if you want to throw that money in the stock market. And if you burn through, let's say, 10 grand a month, and you have 100 grand in cash, well, maybe you raise 20 extra grand in cash so that you have 120 grand to weather a financial storm over the next 12 months. Then I'd be more okay with deploying that in the stock market. So there are 5 investing worlds that we will help you with. Income planning, estate planning. Income planning, what happens if you live? Estate planning, what happens if you die? Healthcare planning, what happens if you have a healthcare issue? Then tax planning, how do you put, you know, should you do Roth? Should you do Roth conversions, etc.? Should you do municipal bonds? 5th, so we got income, legacy, health, tax, and then investments. Most advisors will focus on one of those domains, your investment returns. We will cover all 5 for you in our 5 investing worlds discussion. Call us now, 888-988-JOSH for that. Any other questions on that or follow-ups?
No, that should be about it. They're supposed to be calling me back on Monday between 9 and 9:30, somebody from your office.
Oh, great. Yeah, well, we'd love to meet with you, go over the different things. And it seems like one of the things that I'm hearing, and I hear this with a lot of people, it's one-dimensional things. I got this checking account here. I got this bond that's coming due. I have stocks that I'm looking to maybe get into. I don't see a holistic plan where everything is working together as a concerto, as a beautiful symphony. We don't want to have a cacophony. We don't have 3 different financial plans. You want to have one plan of which you have money for emergencies. You have money for healthcare. You have money for spending. Like you said, I don't know if I'm going to really need this money. Well, we'll quantify that with our program. Okay, so give us a call, 888-988-JOSH. Would love to meet with you. Thank you so much, Steve. And then we'll break, and we'll be back with your calls at 800-321-0710 right after these messages.
Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the Financial Quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org. Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the Financial Quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check.
We're back. This is Josh Jelinski taking your. I thought did we do 2 commercial breaks there? 60. Well, give us a call. 800 321 0710. We have just 13 minutes left. If you got a question, I'd love to hear from you. 800 321 0710. Someone just gave their best to you, Jim.
Oh, well, that's nice.
Yes. And they scheduled to see us on May, in May. So I look forward to seeing this beloved listener friend. So give us a call, 800 321 0710. If you have questions on stocks, bonds, annuities, mutual funds, whatever question you have, no question is a dumb one, except the one that you do not answer. Except the one that you do not ask. No question's a dumb one, except the one that you do not answer. So, can Trump fire Fed Chair Powell? You know what they should just do? They should just end the Fed now. You know, has the Fed, regardless of where you sit on the Trump-Powell divide, like, what has the Fed done? They just send him, speak, and everybody's in a tizzy. Now, Powell has said that it is not permitted by law, but here's the problem. Does the Fed have the power? Like, where did they get that power? Do we elect a Fed chairman? No. The president nominates them. So, theoretically, it would be under the judiciary branch. The executive branch. But the Fed is a group of unelected bureaucrats that are really controlling things. And the creature of Jekyll Island and all those things talk about the history of the Fed and some interesting things. Tariff-free cars are being advertised at dealerships. That's pretty good. Now, if you're worried about a job loss, it's time to pump up your emergency savings. Now, egg prices are down. Oil prices are down. Lot to talk about, but I always want to hear from you. So what about your IRA, your 401k? Some of you, it's your biggest investment. Are you prepared for a 20% drop or more in the stock market? Are you prepared for tax hikes when you need that money? Your 401k or IRA has a tax lien on it, an IOU to the IRS, meaning when you work, you put your money in your 401k, you get a deduction. It doesn't count against your income tax. But your favorite uncle wants that money back when you need the money. Have you prepared for that? Give us a call, 888-988-JOSH, and I will give you my free investment guide when you schedule and keep your no obligation review. Now, this is interesting. Rory McIlroy won the Masters and has a 9-figure net worth. How did he make his millions on and off the golf course? So this is pretty crazy. His net worth of about $250 million. In April 2025, Rory surpassed $100 million in career earnings on the tour, becoming only the second golfer after Tiger Woods to do so. Champion golfer Rory McIlroy has done what just 5 other professional golfers have been able to do, win a career Grand Slam. McIlroy sank to his knees following the victory over Justin Rose in the 2025 Masters tournament in Augusta this month. So this means he completed the Grand Slam. In golf, this means winning all 4 major championships at least once during your career. The U.S. Open, the Open Championship, PGA Championship, and now the Masters. Ben Hogan, Gary Player, Jack Nicklaus, Tiger Woods, and Gene Sarazen are the only other golfers to win the modern career Grand Slam. In his nearly 2 decades as a pro golfer, he's made a fortune on and off the course, and his net worth is estimated to be about $250 million. He was the second highest paid golfer in the world in 2024, earning $38 million on the course. With 29 PGA Tour wins, McIlroy's in the top 20 for all-time wins in the PGA. But how do you make all that other money? When he's not golfing, he makes it from business ventures and partnerships. Many of McIlroy's ventures involve golf too. He founded TMRW Sports, a sports media and entertainment company, with Tiger Woods and Mike McCarley of NBC Sports. Among the ventures is TGL, a party virtual golf league featuring top players. The league has 2 weekly matches that air on ESPN and ESPN+. He also founded an investment firm, which is investments in companies including Ticket Marketplace, TickPick, Golf Pass, and a virtual reality game, Golf Plus. Plus even the fitness tracker, Whoop. So he's done a lot on and off. And he's made partnerships with major brands like Nike, Optum, Workday, TaylorMade, and Omega. Give us a call during the break. Taking our last break of the hour, then we'll be back with a final call at 800-321-0710. 800-321-0710. This is Josh Jelinski, the financial quarterback. Don't touch that dial.
Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the financial quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check. Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the financial quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org.
We're back. Be sure to look me up on X at Your Financial QB and YouTube. Subscribe to our YouTube channel, The Financial Quarterback. Subscribe to our podcast on Spotify or Apple. Next up, we got Jesus. Go ahead, Jesus.
Yes, I have a question. I got laid off last week. And I
I'm
have
sorry
a
about that.
401k, and I have a $60,000 loan with them. How do I have to pay that loan if I'm not working, my 401k loan?
Yeah, we can help you with that. You either pay it monthly via the payments that you set, or you roll it over and then they use some of the funds to pay it back and you roll it into an IRA. We could help you with your rollover and loan plan. Just call us at 888-988-JOSH. Would be happy to help you. But you don't, it's not like, they're going to call your loan on you. You don't have to worry about it. So we could just help you do that. Okay?
Okay. Let me get a pen on that way I can get there.
Sure. The number is 888-988-5674. That's 888-988-JOSH. 888-988-JOSH, basically, which is 888-988-5674.
Okay, 5674. Okay. So
Yeah.
you say I can roll over to an IRA and I don't have to pay that money back?
No,
that loan?
well, you have to pay it back, but so if you have $100,000 in a 401k and you have a $20,000 loan, when you do the rollover, you'll have $80,000, and they'll take the 20, or you could keep it there and keep paying the payments. So.
Oh, okay, I got you.
And we'll
Okay,
figure out what's in
call
your
you.
best interest. You know.
Okay, I will call you back. Okay.
You know,
Okay?
the benefit of doing a 401k loan is sometimes if you need the money and you have no place to get it, you can get it, and then they pay it back with taking it out of payroll deduction. But if you're not working there anymore, they can't pay it back via payroll deduction. So some people then pay it back and then roll it over. Some people then just net the loan, and we'll be there for you if you need anything, okay? And that reminds me, your 401k is your biggest investment. Have you looked at the sub-accounts? Have you looked at your investment options? Have you considered, you know, some people said you're paying yourself back interest. Yeah, but you're also paying yourself back with after-tax, with pre-tax dollars. So it's not, I don't know, I generally don't recommend a 401k loan, but we'll talk about that in future shows. 888-988-JOSH for the free book when you schedule and keep your no obligation review. Call us 888-988-JOSH.
The preceding program was sponsored by the Jelensky Advisory Group. Any
Twitter.
awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelensky or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at jelensky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelensky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed.
You have